This is Eric Mother, mother.com, with the weekend market analysis for the weekend of May 4th and May 5th, 2019, with about 20 minutes to go before the close of the week. Let's take a look at markets here, and we're going to be taking a look initially at the S&P 500. Let's take a look here at the S&P 500, and one thing we can look at here is the breakout in terms of price based on moving above 2018's weekly closing high, which we can use as a good gauge of the market's intention. So we closed above that last week. The market is doing its best to have a follow-through week. Usually you want to see a breakout and a follow-through, so that would be positive. The level to watch here on a breakout level based on the close on a weekly basis, the highest close for 2018 was 29.67. So anything above this price is bullish, and the market should remain healthy. We also know that as the weeks go by, should we end up breaking below this level, that would be a net bearish development. So the level to watch here on the weekly is very simple. Just watch anything above this. The market remains with the upside momentum, and one can play that from a bullish standpoint. In an effort to keep things simple, take a look at the daily for the S&P 500. Again, we can see based on the prior daily closing high from 2018, the level there being at 2930.75, which is the close here. As long as the S&P 500 is above this level, then this market continues to show strength, and one can look at this as being positive and encouraging for bulls. So anything above that, just like we saw for the weekly, very simple here, is bullish. And if the market at some point, if it goes on to break below this level, which is this price, we can see that as being a net negative. For now, the conclusion is very simple. Market is above that price. So we have to end the week here assuming that the market continues to be favorable and the possibility of higher prices continues to be the case until such a time as when we break below that price level. So very simple, just the breakout levels can be a good guide. Anything above the breakout levels on the weekly and daily is a reason to remain bullish. A break below those levels on the weekly and the daily could be a reason to consider taking the opposite direction, which is the bearish view. On a day-to-day basis, if we consider the break from 2018, which is this line here, which corresponds with this break, and we can draw a line from there, should be something like that. We can see that as long as we are trading above the blue line, we can anticipate the market being bullish to stable. We can see that if we take the area where the market was recapturing back above the blue line, good things have been happening in the market. And now we see this turning into support. So that's encouraging. And in the short term, as long as the market is above this level, we can assume that the market continues to favor the upside. If we take a look also and draw a line connecting previous recent RSI lows, something like that, again we see that the market did come and find support this week on the line, and as long as that's the case, that continues to favor a market that wants to continue building and going higher. At some point, should the market break below these two lines, that would be a sell signal. For now, looks like the market is above the two lines. We have to conclude that things are favoring the upside. With that, as we approach the end of the day and the week, that concludes the free portion of this video. The rest of the video is for paid mother.com subscribers. Do enjoy your weekend.
Bye.